Hey guys, how you doing today? Welcome. First of all, I know I'm doing this in the car. We're busy. we're busy touring different properties, and so I'm on my way back to my hotel. But we move, no matter what. We have to do this. We're looking at how to raise funds for your real estate deals in America. The last Saturday or so, we did that of UK, and some of you in the US were like, when are we going to treat the one of US? So, good news today. We're looking at how to raise capital, how to raise funding for your real estate deal in the US. Let me also announce good news. I am ready to partner with a lot of you who have good deals, okay, and see how I can help you fund your deals. If you give me a good deal, I'm willing to work out how we fund it and get it to come to pass. But you have to be trained, so I must say that. And that's why I'm doing the Saturday and Sunday Real Estate Investment Masterclass here in Houston. And if you're not in Houston, you can join us virtually. We're going to be looking at US and Dubai market when it comes to real estate. Okay? And I can assure you, for everyone who show up, if you even already have a deal, then but we're going to look at generally, how do you fund generally, and it promises to be a fantastic conversation you don't miss. And I want you to invite as many people as you know. Invite your friends, send this to so many people, because this is going to be game changer. Uh, how many of you are in the US or you intend to invest in the US? Can you indicate if you're currently in the US or you intend to invest in the US? My first guest is here, ladies and gentlemen. Is a man that the richer he gets, whiter his hair and his beards. So, some people, the richer they get, the whiter their beards get. So, ladies and gentlemen, help me celebrate Jamal Alateru. It's my first guest here. Again, as you're joining, if you are, tell me the city you're joining me from. Also, if you are in the US, state your location in the US. And if you are not in the US but you want to invest in the US, please state. At some point, we'll pull as many of you up and be able to take your questions and see how we can support and take all your questions, okay? You have a deal, you need funding, we'll answer it today. So welcome. Remember, share this, invite more people to join us. Let's get more people to come and learn from today's training. Help me welcome Jamel. Come on, show him some love, guys. Show Jamel some love.
Greetings.
Right.
Thank you, doctor. Thank you for having me.
Thank you for joining, by the way. Good to see you. How's your day going?
So far, so well. Busy like yours. I'm trying to be as busy as the doctor here. I'm trying to be as busy as him. All over the place.
Uh,
Where I'm trying to go with things.
rich men cannot be busy, my friend. When I grow up, I'll be I'll be like you. I won't be as busy as I
I'm a student. I'm a student as well. No, I'm a student. I'm a student.
am. Okay, so let's get started. Give us your background. We just want to meet you. I believe a good number of people are just getting to know you for the first time. So kindly, let's get to meet you. Can you hear me?
Yes.
So I said, kindly introduce yourself. A good number of people are probably meeting you for the first time. So
Oh, okay,
who
okay,
is,
okay,
who is
okay,
Jamal?
okay. Thank you. Greetings to everyone that just took time out to join the call. I think that if no matter where you're at, if you're taking time out to join the call, I think you've taken the first step. Doctor, I'd like to thank you very much for having me in front of your audience. Myself, my name is Jamel Olateru. I've been a mortgage broker for quite some time. I also specialize in CRE, which is commercial real estate lending. Um, the brokerage I'm a part of is Imperial Mortgage Services. It's based in Houston, Texas. Also have another company outside of that where I do a lot of the CRE commercial lending advisory service, which is through Home Craver. What I try to do is really, as we're here to discover, is figure out financing on many different levels, whether it's just the investor that's looking to purchase just a residential property, only looking to probably even build that or buy that, whether it's pre-owned or whether it's new, finding you financing from that or putting you in a better financing vehicle. If it's an investor looking to increase a portfolio, we're here to figure out how to help that person strategically put that together and map that out. So I've turned plenty of homes and plenty of loans. I've put people in homes. I've helped them after they've sold, and I've helped people build portfolios. So I'm here. I'm at your disposal if you have any questions, and hopefully I could be of a great assistance and support to everybody that's joining today.
Okay, so why was the concept of, mortgage, important to you? I mean, why did you go into this industry?
Great question. Mortgage for me, initially it was, I knew that, how can I say it? Everyone will need a home. I was trying to look for an analogy. Like, I knew that whether someone is buying or whether someone's refinancing. And I also know that the real estate is the biggest game you could possibly play
Yeah.
here in the United States. So that was the biggest reason. Pretty much, I did mention that I couldn't do it all in this short period of time. My father was also, him and his partners were also in the real estate business, so I got to see it at an early age as well. That was huge for me. From Chicago, so initially I got to see a lot of what it looked like earlier on, condos or different things. But to answer the question in short, yes. I mean, I knew that it was a vehicle that people were also always going to be in and always going to get in. So real estate is huge, it's massive. One of the multi-trillion-dollar businesses here in America.
Yeah. So why do you think people of color haven't, made enough headway when it comes to real estate investment? I mean, some data, even from basic owning a home, data shows that of people of color own their houses. And if you then take it further into commercial real estate, investing in real estate at the commercial level, you don't see too many people of color doing that. Why do you think so? What's holding our people back?
Phenomenal question. I think the sole thing is it's knowledge, right? I think that if we come to know and understand something, and we understand it really well, then we can explore it. So I think what happens is we just don't have the knowledge,
Yeah.
and we don't know where to find it. I mean, if someone said the same $20,000 you use to finance a vehicle, you can go take that and put it into real estate, and then
I guess someone was trying to call you. We can't hear you again.
you know which space to move into, if that answers everything.
Okay, we can hear you now, but it went off at some point. Um, so you may want to take it again. Why you said knowledge? I think that's where it stopped.
Yeah. So the knowledge vehicles is what I was saying. Like, it's just, I think that it's lack of knowledge. If we don't have it, we don't really understand it. I was explaining an example of like a purchase and just financing a car, right? That's some of the easiest things that a person figures out how to finance. But if someone could tell you with the same $20,000 that you finance a car, I could show you how to go increase a couple assets. And from those assets later on, you can pull equity and buy the car. I'm sure people would take that position, but it's just not having the knowledge to know how to get their foot on the ground. So I think that's the biggest reason. And I think that once you understand that knowledge, then you can start moving on and understanding bigger things like the doctor is doing, such as how to get with people and collaborate and do bigger things like commercial development projects and whatnot. I think it's just a step process that people just lack the knowledge of.
Okay, so why are we not able to get the knowledge? Is somebody trying to hide it from us? Are we the ones who are not willing to pay for it? Because again, a lot of people of color believe that knowledge should be free. And so it's difficult for an average black person to just go and pay, $2,000, $5,000 to learn about how to do real estate. It's like, why will I spend that kind of money? I'd rather even take that $5,000 and buy my first property. Even though you and I know doing that without knowledge, you're just gonna waste the entire money.
Yeah. So great. I think that's a great question as well. I think that the difference between paying someone to get some knowledge, to gain some knowledge, getting it and learning it from an expert, and I think also a mentor. I think everyone should get a mentor in what they're doing. The difference between doing that and going to do it the free route, where you could just Google everything all day, is time. I think we got to start equating time to money, right? So time, like we were speaking in a meeting with the doctor the other yesterday, I believe it was. We can't get back, so that's priceless. I don't think you can place a value on time. So I think why I'm going to spend my money with an expert or a mentor that's already been where I'm trying to go. I'm going to reserve my time, which is more valuable than that money that I'm going to actually pay. And when you think about what you spent on that expert, you saved yourself a lot of the time because he's already filled in all the pit holes and he's done already all the things that you're going to have to go through. He's going to tell you that you don't have to go through that. You can get it this way. So I think that's the importance of purchasing the information from the right person after you've researched versus trying to do it all on your own and do it the free way.
Well, that's very good. So, when we look at commercial real estate, looking at the cost, do you think everybody can do commercial real estate?
No, I don't think everyone can do commercial real estate. I think that that's a step-by-step process, and I think you got to get on the ground initially to do at least your first couple. And if you haven't, you want to get next to someone who has done it, who has explored it, so they can help you get in that vehicle. And actually, it's a blessing if you can if somebody's allowing you to get in that vehicle like that. I think that you should take the time, set aside the time, explore it, and understand it, and it'll help you, get to where you're going probably a little bit quicker.
So, if I want to get into commercial real estate, what's the first step in your own opinion?
My first step is to get next to somebody that's doing it and been doing it for a while. That's the first
Okay.
thing. It's a saying I go by. If you want to learn how to make $10,000 a month, you're not going to go to somebody that's making $5,000 a month or $2,000 a month. You're going to go get next to somebody who's making $10,000 a month
Yeah.
because that's going to get you there. Why? He's done it already, or she has done it already. I mean, it
Yeah.
can go both ways.
Yeah. I mean, that's very powerful. So, now I got this. First of all, when getting lending for commercial deal, what are the three things that the lender look out for before he or she is saying, "Hey, I'm ready to put in my money into this deal"? From your experience.
From my experience, they're looking for on a commercial deal. You're looking for NOI. um, what's the net operating income? That's important to a lender because they got to lend on something that's profitable. Um, Secondly, and could be first, they're looking at background experience. What is the experience of the person who we're actually going to lend to? So I would say that's first. They're going to look at your experience, and then I say they're going to look at your experience. They're going to look at the NOI, the document. You present the documentation. Then I would say the third thing they're going to look at is what's the plan? What's the exit strategy? Because they got to know how you're going to get the deal paid off. Whether you're going to refinance if it's a development or a construction project, whether you're going to finance a property, like what is the exit plan? That's what lenders want to know. So those are the three things. I would say, what's your experience like? I would say the second is, what's the NOI on the property or the project? And I would say the third thing is, what's your exit plan? What's the strategy of getting out of this deal?
What kind of NOI do you think lenders are looking at? If we're putting in percentages, what kind of like expenditure versus income, operating costs versus income, what kind of percentage higher would they be looking at, or profit would they be looking at from the existing property before now you're buying it?
I think the ideal, um, they look at cap rates. So I would say a good price. I think the last time I looked, this could change, so don't quote me. This varies, but I would say a good 7 to 8% on the cap rate, probably slightly under there. But you want to have a really good cap rate. They're gonna want to know the cap rate. That's their language. What's the cap rate?
Mm. So to break it down layman terms, because I tried to make these sessions very lay basic. You're saying that if I want to buy a property, let's assume the cost of the property is $2 million,
Hmm.
right? And and the current income on that property should be income. Net income should be around 7% of the $2 million. Is that correct?
Yeah, something like that. Let me speak. When we're talking commercial, let's do it this way. Let's say
Yeah.
you had a property worth $14 million.
Oh, okay.
Um, let's say if it's doing 600,000,
Yeah.
net operating income on that, the cap rate is going to be around 4.3%,
Okay.
right? So if it's doing a little bit
Yeah.
more, then the cap rate is going to be higher,
Yeah.
right? So I would, it's kind of like that. So if you got $2 million, I got to pull out a calculator for that, but it's doing like $200,000, $300,000. I mean, that's somewhere where you get a good cap rate. Probably a little less than that actually on
So
$2
so
million.
let's
Probably like,
let's use a $20 million project. What is the cap rate we're looking at?
I think if you get anywhere between a 4 and 6%, you're good.
Let's let's put in numbers. So, um, are you saying it on a 20 million, we're buying the property for 20 million,
Mhm.
and the current income is, let's say, 1.5? Does that meet what you're looking at?
Yeah, 1.5 will work. Yeah. And 1.5, let me be clear. 1.5 based on whatever those expenses are. So remember the expenses will tie into that as well. I don't want to go too far into it with the audience sake, but you're on the right path. So if it's doing 1.5, we got to make sure the expense, because expenses are going to balance out what the cap rate is going
Yeah,
to be.
yeah, exactly. Yeah. So we have to be sure that the expenses is not also 1.1
Yes,
or
sir.
$900,000.
Yes,
So
sir.
it then takes that all the way. So now, I mean, looking at the high interest rates, is this the best time to do commercial real estate, or real estate in general, because of the interest rate?
That's an incredible question, Doctor. I think that's the best way to answer that. I think it depends on the project. That's a loaded question. I'm gonna tell you why. I think it depends
Yeah,
on the project. Rates are typically going to be higher when you're doing a development project in the commercial space.
yeah.
So if the if the risk versus the reward is a little greater in a development, then golden, right? Because where you're looking to climb to, it will make sense in the end. Now if you're doing like an investment property, I would say this is going to come into like, look at, measure where the property was in value probably about a year or two ago, if
Yeah.
you're looking for an investment, okay, what rate am I getting on it, and where's the valuation going to go? So it's just not a rate thing. You know, a rate thing is one thing, but what area am I buying in right now? What's the valuation potentially of this property? And then to make sure you're not buying inflation. So it's not a bad time to invest or purchase homes. I think it typically depends. It's an individual or person to person type of of thing to explore. I don't think there's a horrible season to buy real estate, because guess what? If you're not buying it, somebody's going to buy it up, and then next year when the rates fall, they can always refinance. But guess what? They still got the asset. They're not going to
Yeah.
see the rates go down, because then the inflation could still stand, and you could do that, or the price could go up. So
Mm.
something's going to always happen in the real estate business.
Mm. Yeah, I like that you said that, because sometimes people are really scared. Oh, the interest rate, and and my argument is that when the interest rate is high, the seller is the one having to pay for that. So you have, sellers willing to go lower, because, and then so you're even able to buy the property at a cheaper price. And of course, when the interest rate comes down, you're still able to get down what you're having to pay on the mortgage.
That's
What do you think about that?
that's phenomenal. Actually, that's a great point you make. Let's just go back right after COVID. Coming out of COVID, when they started balancing certain things out, rates were at an all-time low. I was putting a lot of people in 2.25s. I think I put even one of my clients in a 1.75 on a 30-year fixed mortgage. Unheard
Yeah.
of. So the point that's being made here, and what Doctor's speaking on, is like, at that time, there was bidding wars. You had a lot of people migrating from the west coast of the United States of America, from California over into
Yeah.
the Texas region. They
Yeah.
were able to sell and offload a bunch of real
Yeah.
estate over there, 3,000, 4,000 square feet at $800,000, $900,000.
Yeah.
So what that created is a frenzy in Texas, because in Texas now, the person that's moving that money
Mhm.
from there
Mhm.
to $800,000, $900,000 in Texas, they were
Mhm.
paying, I would say, $10,000 to $20,000 over sometimes. So there was bidding wars.
Wow.
So that wasn't a time to really buy a lot of property, because you get outbid by somebody coming
Mm.
from California. They had plenty of money. So
Mm.
there was no real market for buyers that was local
Mm.
at that moment.
Mm.
And then that drove pricing up. So like the doctor's saying now, is with the rates up, they're cutting the buying down. So
Yeah.
now the seller will let you come in and negotiate downward
Yeah.
on property.
Yeah.
So it's your game.
Mm. I mean, it's really what I mean. What would you say to when people say you can never lose when it comes to real estate investment? Also, what range will you put a real estate investment? High risk, mid risk, low risk?
What range should I put the investment?
General real estate. So first of all, people say you can never lose when it comes to real estate investment. Do you agree to that? Second question, what way will you classify average real estate investment deals? Is it a high risk? When you're investing in real estate, should you be thinking, oh, this is a high risk investment? Or should you be thinking this is a mid risk investment? Or should you be thinking, oh, because I'm buying property, this is a low risk investment?
That's great. That's great questions. The first question, I would say, you buying real estate is good. Can you lose money in real estate? Absolutely. I think that it depends on what you're buying and when you're doing it. Why do I say that? To say that you can't lose money in real estate would be absolutely false. One. Second, if it depends on, when I say what depends on what you're doing, like if you're doing a fix or flip in a bad market space, you could lose a lot of money. I had a brother-in-law that lost money. Had he held out though, I think to the other part of your question, can you lose money? Had he held out, he would have actually doubled the return on his money. The problem was, couldn't really hold it in place long enough to sustain what his earning potential was. And not his fault with that. He couldn't see where the market was actually going to go to hold on to that investment that he did long enough. So you can lose money, but I think that depending on your how long you can hold on to properties and certain things, you could really come out way on top. I mean a person that's buying a pre-owned property from a person that's doing a ground construction. There could be a big difference between how much money you can make on that investment. So I think your approach is something you should pay attention to. What am I getting into? What is the potential ROI? What's the downside if this goes left? So also weigh your cons and pros. I think the other part of that question was reiterate that one part again. I just want to make sure I get that right. The second
Yeah,
part
I
of that
mean,
question.
will you generally real estate investment? Will you call it a high risk or low risk or mid risk? Generally, real
Okay,
estate
got you.
investment.
Generally, I would say it's hard to weigh whether it's a low, a mid, and a high. And the reason why I'm saying this is because I have different tiers of clients. What's medium risk for somebody else may not be medium risk for the other person.
Very
That could be actually low
true.
risk.
Very
So
true.
I think that it depends on where the person is. The first question I ask is, where are the assets? Like where are you, in this particular position? Because what I don't want to do is I don't want to put a medium risk person in a high risk situation.
Yeah,
I don't want to put a
yeah.
low risk person
I
in
like that.
I gotta watch and
I like
I
that.
gotta know their risk and understand and evaluate them to
Yeah.
know what are their medium, low, and high risk. So
Mm.
you can have all of those. You could personally be putting yourself in a high risk, a medium risk, and a low risk. I think my job as the financier and the broker is to make sure I'm putting them in the right risk environment that is sustainable for them and their families.
I like that. That makes a lot of sense. So let's talk briefly about. By the way, guys, so this is just to get you guys to have a taste of some of what we're going to be looking at on Saturday and Sunday, which is the real estate investment masterclass. I definitely will have Jamel talk to us either virtually or he come down from Dallas. But I'll get him to be in the room. But can you talk to us on the concept of underwriting a real estate deal? And, let's just start from there.
That's good. That's good. Simply underwriting a real estate deal is what the first thing that's looked at is credibility. You want to have like good good scores, credit scores, rather. Your debts when you get ready to purchase a home because that's the first thing they're going to look at. Now, me personally, I could put people in mortgages with very low FICO scores. Is it a tougher deal to do? Yes. But the first thing you want to look at, underwriters looking at is credibility. Second thing they're looking at is income on the deal. The biggest thing about income and liabilities and why this matters when we're out getting new cars or we're out running up credit cards or whatever that is, when you get ready to go buy a house, all this stuff matters. Um, so they're looking at debt to income. So the underwriter's looking at your debt to income
Sorry,
ratio.
I'm
How your debt.
sorry, I'm cutting you short. So you still continue that line of thought. What is the lowest credit rating you can work with? What's the lowest, and then you continue on the underwriting.
Some down to 500. Preferably, I like to be at 580 because 500 is like they'll you'll put it in there sometime and we run into our own challenges. But I've seen them done as low as 500. They'll tell you, but 580 is really even though it's not the greatest score. 580 it could still get you in a house with some really good income. So I would say somewhere around 580 is where I would try to be. You know.
So go ahead. Yeah. So first thing is credibility, and in this context, the credibility is your source of your consistency of your income as well as your credit score. Is that
Yeah,
correct?
yeah. So your credit score, and then yes, your income. So your credibility of is this house affordable for you? So underwriters looking at that mainly.
We can't hear you. I guess somebody was trying to call you. Hello, hello, Jamel. We couldn't hear you. I think somebody was trying to call you.
The
Hello,
length of
Jamel. Can you
job.
hear me? Can you hear me?
Yes,
I
yes.
guess somebody was trying to call you, so he cut out at some point. So, so we're back to um your your income and your credit score. Hello.
Okay. Okay, I'm here. I'm sorry. So the income is what they're looking. So your credibility, right? FICO scores, different things like that. Your income. So whether you're income eligible, can this person afford the property? After they get to that, they're gonna look at debt to income. So debt to income means how many liabilities do you have versus how much income do you have coming in now, because you're about to add another big debt, which is going to be your mortgage payment. So now they got to weigh all of those options to determine your eligibility to buy that house.
Mm.
So that those are some of the biggest things that they're looking at. Now, the other part of that, let's go to the third thing. Underwriter is looking for what's the job history. So
Okay.
some people, they kind of struggle with, like, I'm working a job. What's the job consistency?
Yeah.
I'm working a job. I've been consistent. What is consistency to an underwriter is, have you been working a job 2 years straight with no gaps, no time?
Wow.
Underwriters looking at that. So those, I would say, if you long as you have those things in order, you pretty much are putting yourself in a really, really good vehicle to purchase a home. It's going out. Going out.
How about underwriting for a commercial deal? Is it what is it the same, or what are the other additional criteria?
Commercial deal could be a little bit more complex. That's going to go based on the financiers. They're looking at, some look at tax returns. Um, some look at, and they want about 3 years of tax returns. So it's a little bit different. On a residential side, it's about 2 years of tax returns. And some bank, like 60 days of bank statements. With a commercial deal, they're going to want about 3 years of tax returns. They want P&Ls. They want a lot of information on the property that you're purchasing. Like we talked about, the NOI, so the net operating income. They're going to want information to back all of that up. So the commercial side is going to get a little bit more busier. And then another part of the commercial side is going to depend on what type of lending that you're seeking. Some people are looking for just bridge loans. A bridge loan on the commercial side is a little different. That's like a loan that, you're looking to just get to bridge a gap. So that might take a little less financial pieces, because and it's going to be a higher interest rate, but it's more so like, I'm doing this to bridge a gap until I stabilize the loan. Stabilizing means I turn it into a situation where I could do it for a 30-year fix or a long-term loan period. So that's the difference between those two.
Okay, so when what exactly is an underwriter looking at in the bank statement, in the P&L for a commercial deal? What exactly is the underwriter looking at?
So in the bank statements, if that's being requested, they're looking for assets. And they're looking for the consistency of those assets. Like, how long has that funds been in there so they could be seasoned? They're also probably going to be transaction outflow and inflow of that bank statement history. So that's what they're looking for there. On a P&L, they're looking for profit and loss. Profit and loss are going to determine how healthy is this company that's purchasing this asset. It's going out. It's going out, doctor. I can't hear you.
Am I the only one enjoying this? Guys, if you love this, just type I'm enjoying this, okay? Now, we shouldn't be giving you all of this for free, right? This is good. This is good information, guys. Okay, because oftentimes I meet people and, doctor, I want to start commercial real estate investment. I see you talk about, you do this, you do that. I want to start as well. And unfortunately, people don't even know what exactly is being required from the lender, particularly when it comes to commercial real estate investment. And it's made a lot of our people not to be able to do real estate in a bigger scale. And I'm happy that we're able to really address a lot of what the lender is looking for, a lot of how people can begin to position themselves and things like that. So if I own a company in the US, and I just registered, and my goal is to start doing using the company to do commercial real estate. What are the things that you think I should take serious from day one, to position the company to be in a good standing with a lender?
I would say making sure that the company profile is really tidy. You know
Okay.
what I mean by that. You know, making sure your filings are all good. They're looking at that. Is it in good standing? Is it active? Making sure your accounts is in position. So getting with your broker, your financier, seeing like what funds need to be positioned where. You know how that needs to look, because it's all about presentation too to the lender. You know, so it's so I would say those are some of the main channels you want to have. Um,
Again, we can hear you. It's we can hear you. The last word we
oh,
heard
someone,
was main
someone,
channel.
people keep calling. I'm so sorry. So, so
The,
making sure
the
you have
last word we heard was main channel. That was the last word we heard.
So making sure that you have a tidy checklist, making sure that your business filings is in order, LLC is good, it's in good standing. Some of that have come up even sometimes the filings just may not be in good standing. So just making sure all that stuff is always in good standing. The accounts, making sure your statements are where they need to be to put you in the best presentation light to the lender when you're starting to obtain financing.
Hmm. Um, However, because the new company, and we're just quite new, and that's why I'm asking the question. What are the things that, yes, it's in good standing? Um, let's say we move money from one of the business or from investors into the accounts. It has enough income. Are there other things that one need to do, or do we? Does the company needs to probably do another deal with somebody else? I mean, can somebody just register their company? They have the right knowledge and they have the funding, and be able to start pushing, big commercial deals.
Yeah, I think, the biggest thing with after you check those boxes of proper LLC, it's filed, whether it's new, um, or not. It's making sure those things are in order. I think the next part of that is whether it's new or it's pre-existing. I believe it's just if the assets are there, the worst you might run into is probably a seasoning period, and that's fine. That's okay. The biggest thing that the lender is looking at, even if it's new, is where the assets were obtained from is important. So, doctor, I want to address that. So it's like you don't want to go get money from the safe in the house, put it in the bank. But if you did do that, I'm not saying that's a bad thing.
Yeah,
Understand that the bank wants to see that money sitting and resting for a while
yeah.
and see nothing moved, right? Because there's other big laws that govern how you move finances and funds.
Mm.
So especially when and then if you're moving those from offshores, let's say my business is offshores. People have businesses overseas and over across the water.
Yeah.
So what happens is here in the States is that they'll take a look at that and they'll consider that.
Mm-hmm.
It's some of that comes up in underwriting sometime where, I have people all the time offshore clients, whereas they have invoices, right? Because they moved $40,000 to the United States. Underwriter
Mm-hmm.
might say, where did this $40,000 come from?
Mm-hmm.
If
Mm-hmm.
they give me an invoice that they have to an offshore company, no matter
Yeah.
what that company is, and it's a track record, that's fine.
Yeah.
It shows that it was a legitimate transaction. It
Mm-hmm.
took place offshore. So the funds was now moved to the United States.
Mm-hmm.
So I think as long as you have all these things in these proper channels in order for the underwriter,
Mm-hmm.
you'll be fine even if the corporation is new.
Mm. Okay, That's good. By the way, for those of you just joining us, we're looking at how to raise funds for real estate deals in America. And I have here Jamel Olateru breaking it down for us. He's a mortgage consultant, finance expert around funding. We're just breaking it down and helping people to understand. Um, it's important to also say, this is a disclaimer. Jamel specializes in big deals, so don't waste his time.
Hey, doctor. Hey.
Don't waste Jamel's time. So I know a lot of you will start following him. And Jamel, I need funds for my deal, but don't waste his time. If there's not enough meat, on the bone, he will rather pass.
You're so much wisdom comes from you. I could just sit like a fly on your wall. I'm fine.
I'm happy to say what you don't want to say. I'm happy to say what you don't really want to say,
Thank you much. I owe you
but
dinner for that. Don't worry. I will get you dinner. No worries.
but for someone who wants to reach out to you and they want to fund real estate deals, uh, uh what's the procedure?
Thank you. You can reach me at you definitely can hit me in the back channel. So I'll check it, knowing that I did this live. I'll check there. My email address. You could do. I have two of them for residential side. You can go with J. That's JOLATERU at imperialmtg.com. That's my personal residential email, and then my other one is it's Home Craver, so it's JOLATERU at homecraver.com. And that's where I do the advisory on CRE, and I just opened up that channel. So, Doctor, I didn't get to you on that one, but I opened up another channel. So there's different things that I like to do. We talked briefly, so I opened up a channel for that one. So
That's good. That's nice. So guys, you can send him a mail and shoot him a mail if you want that. While we start wrapping up, I want to say what number one, let me even ask this. What has been the worst client you've ever had? And what has been the best client you've ever had? Of course, I'm not asking you to mention name, but
yeah,
the experiences that happened.
I would say can't say I have a worse client, but I can say I've had some challenging clients, and I would say with the challenging client, a challenging client for me is someone who not only really didn't come prepared, but they make their problem my problem.
Okay.
Um, and the thing is, if you make my problem, it starts to be a back and forth thing to whereas we're not really getting what we came together to do and complete. So
Hmm.
I think the importance is like with them, if I have like a non-communicative type of client, could be hostile here and there, it just makes it hard for me to do my job
Hmm.
because my only initiative is to try to put them in a better position that they were in before they came to me. Like doctor, I have a joke is like, doctor knows like my only position is to make you wealthier than you already are. But I took that to heart. I mean that, right? So the thing is, I don't want to put you in debt or bad vehicles when you come to me. That's not my position. There's nothing in that for me, right? So so I would say my more challenging clients are the ones that just come unprepared, and not only unprepared, they're combative, and they know it's their own. They're not letting me lead them into a greater situation. So I'll say that's the client. Now, to my really, really awesome clients, the top tier ones, those clients are, I don't want to put a money value there because we brought that up at later points. I don't want to go there. So I don't want to go there. That's not what makes just a good client. But what
But
makes
the money is part of it. It's part
it's
of it.
part of it.
The
They like
volume, the volume is part
the,
of
it's part of it. So I
it.
would say a really good client for me, they're organized. I don't expect you to have everything. That's what you come to me for, to kind of like help brainstorm to get you to the right space. That's not an issue. the best client, they're organized, they learn, they'll take information, they listen very well, and they actually have a desire to get the deal done. And that shows up in how quick they respond, how well prepared they are, and they just know how to really put things in order to help make it better for me to get the transaction done. Because I really like to close my loans on the residential side. I like to close my loans in 20 days. Any deal really I touch. My challenge with challenging myself is how fast can I get it done? And it's not that I want to make mistakes. It's that that's the first and last impression that I want to leave on a client. We got together. We had time and efficiency. It was very efficient from start to finish to get that done, and we got it done. I do not like to not get deals done. That thinks it haunts me. But we get past it. That's life. Sometimes it just won't go through. But that's the best client. One that's organized and that's open. That's open and that's very responsive, I would say.
And then the third one, and the check is big.
The check is very large now. So that's always the best now. That's the reward to us. You got to complete the transaction. I got to get the check. So we're all happy. You walk away with an asset. I walk away with a check. It's fine. We're all happy.
Okay. So this question I think is very important. A lot of people, I think, exaggerate what is the potential income that can come from a real estate deal. And I want us to use fix and flip for as an example. So I've seen people, for example, go invest with someone on a fix and flip, right? They partner, and then they were promised 40%. And that don't worry if you can get your 40% in 90 to 120 days, because we're going to do the fixing in 90 days and we're going to flip in another 90 days. So just relax. In 6 months, you have 40% profit. And people then feel so bad because 6 months later, not only didn't they get profit, even the capital they can't get, they're stuck. The house is just neither here nor there. And again, it's not even as if it's something they can sell alone because it was was some form of partnership. How do people prevent being in this kind of situation?
I think a fix or flip, that's a great question as well. The fix or flip space is how you prevent it is you got to really understand, first of all, if you're doing that with someone, I would say definitely you want to understand their experience in fix or flips. How experienced are they? Because that's going to be a difference between how much that person, based on their experience, can save you in cost. Because a fix or flip could be very costly. And then if you don't
Mm-hmm.
sell it, like I think that you're mentioning now, the problem you run into is
Mm-hmm.
your burn rate in a fix or flip is the biggest.
It's, I'm
The
telling you.
burn rate is like after six, because a fix
Yeah,
or flip deal is hard money typically. That
exactly.
hard money is about 9 months.
Yeah.
And 9 months they're saying, hey, 9 months we expect you to be in and out of this deal.
Mm-hmm.
So I would say to put yourself in a better space with a fix and flip, understand who's helping you with that if you don't have any experience, if they are experienced or not. Secondly, what's the potential ARV? So what's the after resale value? And then what's the area that fix or flip, if you decide to entertain this, what's the area that fix or flip is taking place in?
Mm-hmm.
And then lastly is what has sold in that area in the last 60 days even, and what has it sold for?
Yeah.
Because that's what's going to determine what your real return on that profit or your ROI is going to be on that
Mm-hmm.
project.
Mm-hmm.
So put all those things in place if you're going to entertain a fix or flip.
Yeah. Powerful. Guys, again, if you're enjoying this, come on. Celebrate Jamel. Help me clap for him one more time if you think this is good information. Again, don't forget, Saturday and Sunday, we're doing what called Real Estate Investment Masterclass for the US and the Dubai real estate market. We're going to be looking at 7 types of real estate you can do. We're going to be looking at funding, and I'll get Jamel to also share in a more elaborate session how you can get funding, how he can support you in that area. But one of the things I also realized, and I think Jamel has mentioned earlier, and I haven't talked a bit about it, is sometimes you get a good deal and you need to bring in, let's say, 30%, you need to bring in 20%, and you can't even raise that 20% or 30%. And that's where you then need to partner with someone. And I'm saying I'm willing to start partnering with people like that. If the deal is good, and you've gone through my training, so you know how to get me the good deal. Because the first thing is what you call a good deal may not be a good deal as far as I'm concerned. So in my class, I'm able to break down this is the kind of deal I consider a good deal that will make all of us money, right? And if you are then able to get me such deal, I'm able to then bring in the counterpart funding, even if you can't raise all of it. And then we can go to someone like Jamel to bring in the 70 or the 80%, of that. But I wanted to speak more to that. The importance of, hey, sometimes your own um, uh, loan to ratio to loan, you are not even able to raise that. And how do people navigate that angle of, hey, I got this good deal, but I need to drop, let's say, $1 million. I've gotten, of course, someone like Jamel who can help me get, the remaining, let's say, $3.5 million, but I can raise my own $1 million. How do people go about that?
So I think that we look at depending on the size of the deal, we look at that deal together. So if a person has that much retained or a person is trying to reach that, we want to look at upfront. We want to look at commercial is different from residential. So if it's residential, if you're buying three houses or you're buying two, then typically we're looking at a 20, 80-20 deal. Sometimes we can get 85-15. So, we start looking at and put numbers that way. If we're looking at commercial, a lot of times 65%, 75. I mean, it just depends. So if you're able to raise a X amount and you want to purchase X amount, we go to the drawing board, we look at that. Before we even go into, any agreements or whatnot, we look at where we are and where we're trying to go. So therefore we can achieve the goal. And what that's to go in and come out with a property or an asset,
Mhm.
if that's what
Mhm.
we're trying to do.
Okay. Okay, beautiful. So guys, again, thank you for being part of this, Jamel. I really thank you for coming and sharing. I want to take your final advice, particularly for people of color who want to go into real estate, who want to raise money for their real estate business. What are your final advice?
If you want to go into real estate and just raise money for it,
Yeah, if you want to go into commercial, you want to do commercial real estate, and you're trying to raise, funds to fund your commercial real estate deal. What are your final advice to particular people of color?
does it have to be just because I want to speak to this two ways. Does it have to be just commercial or can also be residential for people who just want to get started? Can I answer both?
Well, definitely you can
Okay.
answer both. Absolutely. I mean, you do both, so
Yeah.
you can answer both.
So let me speak, yeah, because I think it's important to speak to both. So I think the first part of that is if you just don't know where to get started, I think it's important you just want to get started. I think you should take advantage of some of the programs. Like I have one now that's a 100% FHA financing. Um, Credit scores starts at 620. I mean, you can go as low as 580. You don't even need any money to get in that deal per se. So they're going to do 100% of the financing. If you get with someone, let's just say that's offering you some seller credits or whatnot, it could potentially be a situation where if you're renting right now, you can go from renting to owning in 30 days. I have that program. So I have two of those type of programs actually. So I think that's important to know that. That's knowledge right there. That's a gem. So if you're just looking to get started on a residential side and you just want to own a home and you're renting right now, I have a program for that. On the commercial side, depending on the experience level and how much you've done, I would say that it's best to get with somebody and go along somebody in the commercial space because it's heavier transaction and you just don't want to get stuck in a bad situation. And I think that you'll get a lot out of getting with someone who's doing a lot of those bigger projects, just to come alongside and learn something and be a part of the transaction. So that would be my advice to that.
Okay, beautiful. So, guys, I hope you've learned a thing or two from today's show. Feel free to copy this link, share, and get more people to learn. Priority is that we're trying to put the right information out there because a lot of people want to invest in real estate but don't even know what to do, how to go about it. And knowledge is very, very scarce. But more importantly, you must be ready to invest in knowledge. Like I said, we have this real estate investment masterclass taking place this Saturday and Sunday. You can join virtually or you can attend physically here in Houston, Texas. Send me a DM. I'm giving 50% discount. Is ending tomorrow. So you want to rush and take advantage of that. And that's really where to start from. It's not, oh, I have money, I want to start. You want to get the knowledge. And once you have the knowledge, then it's easy to get a partnership, right? Jamed kept talking about you need to partner with someone that's gone there. But I'm not going to partner with you when you don't even understand what you can bring to the table to help the deal make sense, right? You know, you don't even understand the kind of what is the definition of a good deal, right? And yet you want to do a commercial real estate deal. So that is very, very critical and that's very important. So you don't want to miss the training. We'll break down how real estate works in the US market and the Dubai market and the different types of investment opportunity in the real estate sector. Saturday, Sunday, 22nd, 23rd. Don't miss it. Send me a DM right now, you know, and you can be part of that class or call my office or send a mail and we can get you started for the event. We love you all. Once again, thank you for coming, Jamel. It's been a fantastic conversation.
Thanks for having me.
I'm going to be calling you immediately after this call so we talk some more.
Okay.
Thank you, guys. God bless you. Love you.